Now, your investigations actually created a wealth of education for landlords around tax planning. And we had things like a spotlight, DOTAS notices, stop notices. I personally had not really heard of any of these things before. So I think that's one very positive aspect of the work that you've done, Dan, is it's really opened up the conversation around landlord tax planning and helped to educate people. But those three words I just mentioned, they're forms of notification
Mm.
from HMRC. If you could just address each one and say, on a scale of 1 to 10, how serious is it? For
Okay,
Spotlight, DOTAS, and Stop Notice.
so the spotlight is nothing technical. The spotlight is simply HMRC saying, be warned, taxpayers, we've seen this thing and it doesn't work. You tend to see that for mass marketed schemes. You don't see it for things where HMRC merely technically disagrees. It has to be something quite extreme.
So would that
So,
be, sorry, Dan, to jump in, would that be to
mm,
encourage people to address the issue within their tax returns?
yes, I think it's to sort of persuade people to leave the structure if they're in it already, and it's to warn new people not to go into the structure. It's a cheap thing for HMRC to do legally because there's no process they need to follow. So it's very easy. But they don't do it very often. There have been 63 in, gosh, 20 years. So it's a pretty rare thing. So we, on the day that we published our briefing, our report on less tax for landlords, the less tax for landlords structure got put in a spotlight. And I think that shows quite how bizarre and odd the less tax for landlords structure is. I don't think landlords would normally need to worry about spotlights at all. Spotlights normally for exotic artificial tax avoidance schemes. So that was a very odd turn of events. And that's because the less tax for landlords scheme is extremely odd. DOTAS, it's the disclosure of tax avoidance scheme rules. The, the idea is that back when tax avoidance schemes were much more common, HMRC was always playing catch up. A taxpayer would do a scheme. HMRC wouldn't know about it. The taxpayer would file their return. HMRC would then look at it and go, bloody hell, what's going on here? They'd sit down with the taxpayer, they'd try and work it out. Then eventually they'd realize, hang on, this is something where maybe we need to change the law. But by that time, it was kind of too late. The taxpayer had already got at least one tax year out of this. So the idea of DOTAS was that HMRC would get advance warnings of tax avoidance schemes. They could then choose to challenge them or choose to change the law. We need to be a bit careful because some of the commentary around, in particular, the Property 118 DOTAS notice suggests that whether you're a tax avoidance scheme comes down to the kind of philosophical question that I was batting around earlier. Did Parliament really intend this? That's irrelevant. DOTAS is at its core really simple. The key question is, are you doing something where the main benefit or one of the main benefits is tax? Most things we do in life are not just done with a tax main benefit. If it has a tax main benefit, then at that point you have to see whether certain of what's called hallmarks are there. And the hallmarks, which are particularly relevant here, there's a hallmark for mass marketed schemes, where you have a scheme which is essentially standardized and sold to lots of people. And both the less tax for landlord scheme and the Property 118 scheme, I think, are clearly mass marketed schemes.
Mhm.
There's another hallmark for premium fees, where people are paid a fee which represents more than the hourly rate. And goodness me, the amounts being charged by Property 118 and less tax for landlords are far higher than most accountants would charge for an hourly rate. So probably the premium fee hallmark applies. So if that's the conclusion, if you think that the main benefit of these structures was to pay less tax, then that's kind of it. DOTAS applies. And one of the first questions I ever asked in correspondence, Property 118 and less tax for landlords, was why doesn't DOTAS apply here? And they were never able to answer that. And even now, all the bluster, they're not able to provide a technical answer to that because I think there isn't one. So both structures should have been disclosed under DOTAS and weren't. Property 118 are appealing. I don't know if they'll actually go ahead with the appeals because the technical position seems pretty hopeless to me. But let's see. What does it mean for clients? If your structure is disclosed to HMRC under DOTAS, you can be pretty sure HMRC won't like it. It doesn't mean it technically doesn't work. Remember, the whole point of this was HMRC get to look at the scheme and decide, do they challenge the current law? Do they need to change the law? So HMRC could get notified under DOTAS, say, yeah, we don't like this, but we think it works today and we'd have to change the law to stop it. Be a good result for a client. But realistically, if you look at cases involving tax avoidance schemes that have hit the courts in the last 20, 25 years, the taxpayers lost in almost all of them. So DOTAS it's a sign that things are going to end badly. And for this reason, almost everyone selling tax avoidance schemes these days tries desperately hard not to disclose under DOTAS. Normally they have to, technically, but they will dream up any old reason not to disclose. As a taxpayer, you do not want to be doing a DOTAS scheme. I think I'm right in saying every tax advisor, every reputable tax advisor will agree that you should not be doing something which is disclosed under DOTAS. That is, by definition, high risk. And if you're Barclays Bank, maybe you're happy doing high risk tax transactions, but most normal people are not. You should steer clear.
Well, obviously, the DOTAS only came out after your investigation when a lot of people had been caught by these schemes.
Well, the problem is Property 118 and less tax landlords should have registered under DOTAS themselves. They should have notified HMRC of their structures back when they developed them. They didn't. And so HMRC had to do it after the event. You're quite right, and that puts people in a bad position because they are now locked into a structure that's high risk, which they didn't know was high risk at the time.
Exactly, exactly. And just finally, stop notice. That's obviously to do with marketing the scheme and making sure that it's discontinued and not presented to anybody else.
Yeah, the stop notice is really serious and really unusual. The idea of a stop notice is that there are some promoters who will keep trying to flog schemes which don't work. And the stop notice, first of all, there are penalties if you continue to promote a scheme that was subject to a stop notice. And then from February this year, it's a criminal offence to promote a scheme that's subject to a stop notice. So stop notices are very unusual. And I was surprised to see one issued to Property 118. I don't know why one was issued. My guess is that Property 118 was still trying to sell the scheme after HMRC had said it didn't work. And so HMRC had a sense of humour failure. But I don't know. There could be some other reason.